I don't have my normal microphone, but we are still going to do the daily financial news today, December 10th, because that is what we do. Hopefully, when you join, you can give me a thumbs up. Let me know that you are hearing me. That would be greatly appreciated. Want to talk about the week ahead. Want to talk about an important video that just released right now at 7:30 a.m. on the Best of ORaaT channel. We can talk about rate cuts and what I see coming. And finally, I'm doing more and more research about the crash up scenario thanks to Joseph Wang. So let's get into it, folks. Let's talk about the week ahead first. We got a bunch of earnings announcements. We have a Fed meeting. We have inflation readings. We got all kinds of stuff. So let's get into that. We'll start with the earnings first. First out of the gate on Monday, we will get Oracle. Oracle's an important one for enterprise software. We got a note from Broadcom last week that was weaker than expected, talking about enterprises cutting back. It will be interesting to see if Oracle reiterates that opinion or if they have a different talk track. On Tuesday, we will get Johnson Controls. Wednesday, Adobe. Thursday is an important day for earnings. We get Costco and Lennar. Costco obviously will be an indication on what is going on with the consumer. And Lennar, right? We will get a feel for new home constructions. Toll Brothers reported good numbers last week. We will see if Lennar comes through. And then finally, Darden Restaurants on Friday. So lots of important earnings, lots of important things going on. But really, next week is all going to be about inflation and the Fed. Let's start on Tuesday. We get CPI. I have the expectations for you. CPI headline. Folks, this will be important. CPI headline is expected to be 0.0. Yes, 0.0. Last month was 3. All right, I'm sorry. Let's take that back. Month on month expected to be 0. Last month reading was 3%, or that is the expectation is to be 3%. So I think I shared yesterday, perhaps the day before, I actually expect CPI to surprise to the downside. I'm calling 2.9. We're going to get a 2 handle on it this time. Core, the all-important core, is expected to be up 0.3, with total reading being 4. So the expectations are for 3% headline and 4% core. Tuesday will be an important day. Wednesday, not to be outdone, we will get a reading on PPI, Producer Price Index, followed by Fed rate decisions. I think the Fed decision is all but done. They're going to pause again. The question is going to be, what is the statement? Is it hawkish? Is it dovish? Is it balanced? I expect the Q&A on Wednesday to be quite interesting. Jerome Powell, I suspect, will be asked a dozen times in a dozen different ways. Are you talking about rate cuts? Are you thinking about rate cuts? The market says March. You say higher for longer. What are you thinking? More on that in a minute, because I want to be clear. I think we could have rate cuts without a recession. So again, pretty interesting to think about. So again, we will talk about that on Wednesday. Thursday, we will get initial weekly claims. Again, this is the weekly view of the job market. Last week was down, so we'll see what's going on there. And then Thursday, also retail sales. What is going on with the consumer? Shop till you drop. Are they getting conservative? What is going on? And then Friday, we will get Empire State Manufacturing. So next week, very important week, some important earnings, Lennar, Costco, Darden specifically around the consumer and housing. But CPI and the Fed is all about next week, Tuesday and Wednesday. Now, let's talk about rate cuts, because I do think there is some confusion out there. Again, just so my stance is clear, I still believe a recession occurs Q1, Q2, short and shallow, 2 quarters, maybe, -1, negative 0.1, negative 0.2 growth. So negative, we will have a recession. I want to be clear though. Let's assume this miraculous soft landing happens and every quarter is positive. I suspect by the summer, it is possible that the Fed will consider rate cuts without a recession. How could that be? Well, it's all about restriction or restrictive nature. Right now, the Fed is saying they are in restrictive territory, which again, if you want to calculate that yourself, You could take the funds rate, let's call it 5.25. You could subtract inflation, well, let's call it 3.2. So, quick math, the Fed is restrictive at 2%. Now, here's the wrinkle. What if inflation falls to 2.5? If they do nothing, they get more restrictive. And of course, if we are heading into an economy that is slowing down but not recessionary, I expect the Fed to cut just to maintain their restrictive nature. So it is possible. And again, if we do get inflation down below 2.5, now we're talking upwards of 4 rate cuts. So again, these are going to be all important things to watch next year. What is going on with growth? What is going on with jobs? What is going on with inflation? But don't be confused. The Fed can, I'm not saying they will, I'm just saying they can cut without a recession. Next up, folks, I want to let you know about a very, very, very important video that dropped yesterday, or actually dropped right now at 7:30 a.m. on the new channel of mine called Best of ORaaT. You can see the title in the title of this video, Best of ORaaT. We were lucky enough to have Millennial Mike on our day 8 boot camp yesterday, talking about out-of-state and out-of-area investing. He dropped a lot of gems. We went through dozens and dozens of questions. If you have any interest in out-of-state or out-of-area investing, congratulations. All you have to do is go to the Best of ORaaT channel. ORaaT, of course, stands for One Rental at a Time. And you can watch the 2-hour masterclass on out-of-state investing. I want to thank Millennial Mike for doing that. In fact, I want to thank all of the millionaire friends who have come and helped the boot camps, whether it was the lumberjack, whether it was Jason, whether it was Dion. Everyone who came gave great guidance to the group. But right now, day 8 boot camp, 2 hours, masterclass, out-of-state investing. Go get it. It's free. And let's not be confused. I am trying to monetize that channel. I need 1,000 subscribers. We are at about 750, so we are short. And I need 4,000 watch hours. So my hope is you go to that channel, you watch the full 2 hours, and we get that Best of ORaaT channel monetized. Don't forget to subscribe because I do need 1,000 subscribers as well. All right, folks, let's talk about Crash Up. We first heard about Crash Up when Joseph Wang came on the channel. What was that, 6 weeks ago, 8 weeks ago? I've done a lot of digging. I did a lot of review about Crash Up videos the last 24 hours. Saw a video from Mark Moss. Mark Moss talking about Crash Up. I've seen one from Grant Cardone, Crash Up, and others. A lot of these videos talk about the Weimar Republic, aka Germany after World War II. They talk about Zimbabwe and the Zimbabwe dollar. They talk about Argentina. They talk about Turkey. I want to be clear. Those examples are interesting, but do we really think the US dollar is about to go hyperinflation? Any logical answer, at least in the short term, next 12 months, is no. It's not coming. Also, whether it was Germany, Zimbabwe, Turkey, or Argentina, none of those were the reserve currency of the world. None of those were the cleanest dirty shirt in the laundry or whatever they say. That said, I want to be clear, like Joseph Wang talked about, a crash up scenario is possible. I don't know that it's the likely scenario, but you can play it out. You and I can play this out together, right? The consumer, remember Friday's consumer sentiment, remember inflation expectations, all going the right direction. We have a job market that was 3.9%, now 3.7%. The job market is still strong. Participation is up. Wages are growing, real wages, not nominal. Remember, the last couple of years we had nominal wage growth, not real. It is possible, not likely, but it is possible that the GDP comes down, inflation comes down, but we keep on chugging along. and you layer in 100 basis, 125 basis of rate cuts, what does that do? Assets, again, go up, whether it be housing, stocks, crypto, whatever that happens to be. At the end of the day, the other thing I'm really starting to think about is how folks get wealthy. I was watching Alex Hormozi yesterday, watching stuff on Charlie Munger, and the path to getting wealthy is rather simple. And there's a lot of myths out there. Some myths out there are, one, for Gen X, you have to get a college degree. No, you don't. If you want a career, you want to be a lawyer, doctor, engineer, dentist, whatever. If you want a career, a college education is worthwhile, likely. But do you have to? Is a college education right for everyone? Is it right to take on $100K in debt to get an underwater basket weaving degree and you have no plan? You have no return on investment? A college degree done with debt is an investment. And if you don't have an expectation of a return, is it a wise investment? I'm not sure. Another one, we've often called this keeping up with the Joneses. This is something I suffered from for a decade. As my income went up, so did my expenses. That one error is everything. This is something Charlie Munger talked about, and I think I mentioned it yesterday. Avoid the easy mistakes. If I could go back and do one thing and one thing only, I would maintain my expenses at about the age of 25. And then the next 10 years, I would save whatever grew. I would have been done at 35 instead of 45. Next, entrepreneurship is the only way. Whether you're Alex Hormozi, Cody Sanchez, Ryan Pineda, all of these folks, they all make entrepreneurship sexy. They all make side hustles sexy. Now, I'm all for side hustles. I have 3 or 4, didn't even know what I'm doing. So it is possible, but it's not everything. I believe for most people watching this, your day job is the key to getting wealthy in 10 years. Now, you can go ahead and skill up, you can get a raise, you can change jobs, you can do all of those things. But quitting your day job and burning the boats is not right for most people, in my opinion. Next, there really is a mindset of folks out there that just say day after day they hate their job. I don't know what to tell you. That's a prison. If you hate your job and you wake up and you're drudgery and you're not doing the good work and you're doing just enough, that's not good for anybody. That's not good for you. If that's where you are, look yourself in the mirror. Find something else. Today we have 3.7% unemployment. Jobs are out there. Find something you could go after. The key for me is to look at your job as the key to building wealth. If you can go at it, you can go to each day and go, I'm one day closer to being done. I'm one day closer to being retired. I'm one day closer. It totally changes your mindset. So at the end of the day, I want to thank you for being here. We're not in our normal studio. I don't have my normal microphone. We did the best we can. I got my dogs out with me. They're a little bit cold, so we're going to go inside. Just have an amazing day. Like, subscribe, comment, and again, do yourself a favor. Go to the Best of ORaaT YouTube channel and watch Millennial Mike give a master class on out-of-state investing. Please subscribe. Please watch it to its completion. Love to get that channel monetized. Have a wonderful day. Bye.